Welcome to Tesla Daily. Let's take a quick look at what's been happening with Tesla today. Here's the latest on Tesla. First up, the Model Y gets some exciting updates, including a new 7-seater option. Meanwhile, production in Berlin is facing some challenges, partly due to union clashes. On a brighter note, Tesla is expanding its supercharger network for businesses, and the testing for the Cybercab is still ongoing, sparking plenty of speculation. Analysts are reinforcing Tesla's dominance in self-driving technology, which is great news for the company. In China, sales have dipped, but December is looking promising. Lastly, Tesla insurance is now available in Indiana and Tennessee. Stay tuned for more updates. Let's dive into some exciting updates from Tesla. First up, the 2026 Model Y has officially launched in the US. This new version features a 7-seater option and some nice interior upgrades. The Model Y is already Tesla's bestseller, and adding a 7-seater could attract more families. That's a smart move, especially in today's competitive market. The 7-seater comes at a price of $2,500, but there are some questions about how practical that third row really is. Previous models had some space issues. On the interior, you'll find a sleek black headliner, new wheel designs, and a higher resolution screen. It'll be interesting to see how these changes affect performance and sales. Critics are still concerned about that tight third row, so consumer feedback will be key. Overall, Tesla is clearly working to stay competitive, and investors should keep an eye on sales data in the coming months. Now, let's talk about some challenges Tesla is facing in Berlin. Production at Gigafactory Berlin is under pressure due to union disputes and a drop in sales. This is a big deal because Europe is a crucial market for Tesla. If they have to cut back operations there, it could impact production numbers and delay new model rollouts. Reports show that sales in Europe are slipping, and union negotiations have been tough. Some analysts think Tesla's strong brand and demand for EVs will help them navigate these challenges. Still, investors should watch developments in Berlin closely, as they could affect Tesla's overall strategy. Next, Tesla is expanding its supercharger network for businesses. This initiative lets businesses install Tesla superchargers at their locations. It's a win-win. Businesses can attract more EV customers, and Tesla boosts its charging infrastructure. The first site opened in Oklahoma, with plans for more across the country. This could really enhance Tesla's visibility. However, some critics worry about whether businesses will invest in this charging infrastructure. Still, it's a positive step for Tesla, and investors should keep an eye on its impact on sales. Now let's touch on the Cybercab. Recent images of a Cybercab being loaded onto a tow truck have raised some eyebrows about its reliability. This is significant because the Cybercab is key to Tesla's autonomous vehicle strategy. Tesla assures us this is just routine testing, but any reliability concerns could affect public perception. Tesla has faced scrutiny before, but they've managed to overcome challenges. The testing phase is crucial for the Cybercab's rollout. Skeptics might think repeated issues could delay its launch, which could shake investor confidence. So, while there's room for optimism, caution is wise. Moving on, Morgan Stanley's Andrew Percoco has reaffirmed Tesla's dominance in the self-driving sector, saying its lead is not even close to competitors. This is important because it solidifies Tesla's position in autonomous driving tech, a key growth area. Percoco even adjusted Tesla's price target to $425, showing confidence in their future. But some analysts are skeptical, pointing to rapid advancements from competitors like Waymo and NVIDIA. Investors should keep an eye on Tesla's self-driving developments, as they're critical for long-term growth. Next, let's look at Tesla's sales in China. They dipped by 4.8% in 2025, but December was a bright spot with record deliveries. This suggests Tesla might be regaining momentum in a tough market. In December alone, they delivered nearly 94,000 vehicles, capturing a 7% share of China's NEV market. While that December boost is promising, the overall decline raises questions about Tesla's long-term competitiveness in China. So, investors should closely monitor how Tesla performs in this vital market. Finally, Tesla is expanding its insurance program to Indiana and Tennessee, with a launch set for March 1st, 2026. This shows Tesla's commitment to growing its insurance business, which could enhance customer loyalty and bring in extra revenue. By linking insurance rates to driving behavior, Tesla could attract more customers. Their insurance program generated $747 million in premiums in just 9 months last year. Critics might point out potential regulatory hurdles, but overall, this expansion looks like a positive development for Tesla. So, keep an eye on these updates as they unfold. There's a lot happening at Tesla. And that's a wrap for today's Tesla Daily Insights. Thanks for tuning in. Just a reminder, this is for informational purposes only, not financial advice. Catch you in the next update.